Hello viewers, welcome back to the channel. Markets are nearly all-time high. Oil prices are jumping around, and honestly, it's getting a little bit tricky, confusing to figure out what's really going on in the market and what we should do next. Because whenever an oil price spikes, it doesn't just stay with the energy market. It pushes up the transportation cost, raises prices across the economy, and that's where inflation comes in. And when inflation raises, interest rate raises, stays high, which puts pressure back into the stock market, creates so much volatility for investors. So, in today's video, we will break down what's driving the market right now, how oil is impacting the economy and your portfolio, and whether this rally still has a room to run or it's going to crash. We don't know. We may need to just go a little bit cautious here. We also we will also look at how our portfolio have been performing over the last 5 years, and more importantly, how compounding works in real life. Because small, consistent returns over time can turn into something bigger. And that's really what long term investors should look at it. And that's what long term investment means to an investor. And after that, we'll break down the LP, MLP, which is especially when you're investing in energy sector, you should look at a little bit deeper on what type of companies to invest and where are the tax implications are. Especially when you're dealing with LP, which is the limited partnership or master limited partnership companies, there are some tax implications there. So we will go a little bit deeper on what the differences are versus a regular energy stock in a simple way. And I will also share a few stocks I'm watching closely this month. Let's get started. Let's start off with the sector performance. Sector Tracker is a site, ssga.com. When you get a chance to look at this, this is a go to site for me to look at how the sectors are performing. Looking at past 1 month performance, IT sector definitely as performing very well. Most of the investments are going into the IT sector. Now, when you go a little bit deeper into this IT sector, what's actually attracting these investments? I think there are three key areas. One is the AI companies building the demand for AI technology. Second one is the semis, which is driving this AI. And the third one is the storage companies like SanDisk and Micron and all those companies who are taking advantage of this opportunity to store some of this AI driven data to perform and build that knowledge base for the IT sector. I think these are the top sectors, top performers in this sector. When you look at the top 10 companies who have been producing really good results right now, out of this, seven of them are semiconductor or semi-related devices companies, and the remaining ones are AI-related companies, software-based companies. That's how the IT sector is performing right now. You could see that it is significant, like close to 10 to 15% growth here. Then comes the energy sector. Energy sector is going through a very interesting phase right now. One side, we are seeing a strong demand driving the global consumption, data centers, and industrial growth. While on the other side, we are seeing supply chain disruptions and geopolitical tensions. Generally, this is keeping the oil and gas market volatile, and I think people are cashing in on this opportunity right now. A combination of these two actually creates a steady cash flow for many energy companies, and I think and some of these companies are taking advantage of it, and especially the midstream infrastructure space, distribution related ones, oil refineries. Those are the key or the top performers in the energy sector. When it comes to the key players, the sector is broadly led by kind of integrated companies like the Exxon Mobil, Chevron, upstream giants like some of the midstream leaders, enterprise product partners. And these are some of the companies which are performing very well. They pay you really good dividend. The growth is actually, the price appreciation is pretty slow, very tight growth on these energy sector, but they give you very attractive dividends here. So look at a little bit deeper on the energy sector for if you are a dividend based strategy investor, then and a long term investor, energy sector is pretty good right now. Very attractive dividends there, and take advantage of the situation right now. Until the things get settled down, this energy sector is going to boom, and once all this the war environment goes down, then the local consumption should drive some of these energy sectors growth, like the data centers and AI related things should build the energy sector to even more significant growth here. So, and followed by the third one is the consumer staples. Consumer staples, and I see people who are a little bit conservative, defensive model investors. They are moving their investments into consumer staple, where you're getting a stable dividends and growth, which is primarily focused on the domestic growth, which is what we are seeing right now in past month. And then when you go a little bit deeper into 3 months sector, kind of quarterly performance, pretty much the same. Information technology, energy, And the third one is kind of real estate. It's very surprising because it's summer. People are going to look around for buying a new house or taking advantage of some of the fluctuation in the interest rates. Before things go wild, people are taking advantage of it. And then on top of it, consumer discretionaries are also performing. Companies like Walmart, Costco, eBay, and these are all comes under consumer discretionaries things, and I think they're also performing very well because it is domestically focused sector, and you see a good growth there, kind of steady growth there compared to other laggers here. So that's kind of the overall sector performance here. The next thing to look at it is the spider ETF, and this is another indicator. I look at it deeper just to analyze how the sectors are doing, how the market is doing right now, a little bit deeper into the market. So looking at the spider ETF contains majority of the top performers in the market. That's how this whole ETF has been built. And if you look at it, past 1 month, the trend has been significantly steep. It has been in the growth, and we have hit the all-time high on May 15th or May 14th. That's when we hit the all-time high, and then a little bit of cool-off period was there. It pulled back 1 to 2%, and then again slowly it is picking up. But if you look at the overall 1 month projection here, kind of performance here, you're primarily looking at close to six percentage growth, 6 to 7% growth, which is a significant growth from the S&P 500 standpoint. Some of the major companies, if you're seeing the sector performance, some of the major companies are semiconductor devices, which are kind of driven based on the AI opportunities, and then on top of it, some of these storage companies like SanDisk and Micron and WDC. These are some of the companies are actually taking advantage of this AI sector, AI performance. And if you look at this part, you could see there's a good growth of close to 18% growth since April, kind of March and onwards, past 2 months, around 18% growth. We have hit the all-time high around 749 something on May 14th, and then it's a cool-off period, which is actually going to be in the sideways churn. They are expecting some kind of momentum here. Buyers and kind of generally investors are looking at some kind of momentum here to see which sector, which company in the 500 is going to take the next leap, saying, okay, we are kind of in a volatile market, but we still feel like we are going to achieve our expectations. And that actually leads some of these companies to take that next leap. And those are the indicators, right? So when investors sees those kind of leap, that's when they again put money back into the market, saying, okay, you know what, we got a strong signal here from some of these top performers, and then they expect the trend should continue. And I believe that trend will be continuing it. You could see some pullback, kind of volatile nature, a little bit of pullbacks here and there, steep pullbacks. It's not going to be a very small pullbacks like a 0.5% or less than a 1% kind of pullback. You might see 1 or close to 2% pullback, and then again and taking a V-shaped recovery in the market. And looking at some of these spider ETF top performers, the biggest ones are the Microns and SanDisk and other stuff. So if you look at the trend right now, this particular chart actually looks exactly same as the S&P 500 chart. It has hit the peak on May 14th, and then there's a cool-off period. It hit the peak on May 14th, May 13th, and then there's a cool-off period, and they're kind of churning in the sideways. You could see that in the SanDisk too. Pretty much a similar pattern. 13th was the mark, then a little bit cool off, and then slowly they are picking up that momentum again. So you could see that in the WDC also, and the performance is very evident here. The top performers are semis. You could, when you look at a little bit deeper into the other semiconductor devices, Nvidia is another one. Similar pattern. You could see that it hit March somewhere around 18th. It has hit the peak and then kind of slowing down right now. So we have to wait for that signal. As an investor, what we have to do is just stay in the sideline, look at whether there's a recovery here. If you see a recovery, then you can actually put the money back into the market, take advantage of it. So this is how I look at it from the performance standpoint. The spider is one of my key, the chart to look at a little bit deeper into some of the top performers in the S&P 500. It is trending in a very good direction, kind of sideways turn past few days, but wait for the momentum to kick in, and then we should see another peak there. Some of the investors, big time investors and the lead analysts are targeting the growth for S&P 500 to kind of hit the new milestone, new highs in coming months too. The S&P target is around 8,300. That's kind of roughly they are targeting, which means that S&P 500 ETF will also lead us to that new highs. So overall, kind of volatile nature, very cautious investment approaches are in place right now. But looking at the S&P 500, you see a different picture here. I think it seems like it is accelerating, and with past few days, a little bit of sideways turn, but it feels like it is recovering the the, the momentum here. And investors are just watching to see if there is a signal. Then probably they'll probably put more money back into the market and get this new highs going. So that's kind of the overall observation from the
Let's look
S&P
at the
500.
oil impact in the economy. I picked up some historical data. We can just look at a little bit deeper and say what happened past 30, 40 years. Whenever there is an oil spike, generally it has ended up as a recession in the economy. And when I looked at some of the historical data, and I think consistently we can see inflation and recession causing some of these markets to go down. But why we are not seeing right now, it's kind of completely unknown for right now as an investor. Maybe some of the big time investors, long time investors, experienced investors have a chance to analyze this. Well, also some of these investors are going back and looking into the historical data. Now, that's the motivation of putting this slide for the discussion today. And I think looking back into the kind of period of 30 years or 40 years time frame, 1973 to 74, there was a 4x increase in the oil price from $3 to $12, primarily because the Arab countries stopped exporting the oil to the US. There were political instability at that time, so they stopped this kind of exporting to US. And what happened to the economy? Basically, there was a recession. When the oil prices went up, everything stops. The cost goes up, which has an direct impact on the consumer, and that actually led to the recession. And the S&P 500 performance was, I think, around 40 to 50 percentage down at that time, so from the peak, so which was a drastic hit on the economy as well as on the consumers. And then followed by the 79 80s timeframe, 3x increase. Iran revolution, political problems, disruption in oil production, again caused the same inflation and recession in 1980s. But the market was marginal growth, it's kind of 18 percentage, 18 to 20 percentage growth, which is better than the previous occurrence. Followed by the 2007 2008, which we have seen there was a complete disaster on the financial side, financial crisis. We had a global demand boom, speculations in commodities, which actually spiked up the oil prices. That went up to 147 peak. That was approximately the price that time, and which brought deeper recession. Again, third occurrence of it also caused deep recession. We have seen 37 percentage hit in 2008. It's not just because of the oil. There was the fundamental financial crisis caused a bigger hit in the S&P 500 performance. Then followed by the 2010 2012, the oil price hit 100 plus. Arab Spring and supply disruption, Middle East instability. It was primarily economy was in the recovery phase from 2008, so it was a bit volatile, but okay, I would say in terms of recovery, it was a mild, volatile, and generally positive. It is not given significant boost to the economy, but it was in a positive mode. 2002, again another time we actually spiked up. The oil prices spiked up because of the Russia-Ukraine war. Again, inflation, a rate hike, and then S&P 500 hit between 15 to 20 percentage down. And now in 2026, we again saw the oil's prices are spiked up right now. It's 100 plus right now, very volatile. Middle East tensions right now, Iran related supply risk caused the entire geopolitical instability, caused so much demand to go up on the oil because supply chains are disturbed right now. Currently uncertain. Basically, economy is not sure which direction is going. Some of these semis and AI, we've been talking about AI companies and semiconductor device companies are actually boosting the S&P 500. But when you look at the overall global economy, other countries are struggling right now because of very limited supply in the oil and so much tension in the Middle East right now. So right now, we had a hit kind of V-shaped recovery past 2 months in the S&P 500. Whatever we lost in the Feb March timeframe, April and May actually brought that recovery back. So we are somewhere around 5 to 10 percentage down right now. I think we are recovering faster there. So this is kind of an overall historical context I wanted to share here for the viewers. Like every time when there is an oil price increase, we have seen a recession. And basic question is, are we going to see the recession now this year? We don't know what's going on right now. With the AI and semiconductors are driving some of those recovery here. How long they can sustain this rally, not sure. Again, it goes back to the earnings report. Again, some of these AI companies are building kind of a demand for some of these semiconductors. So if the AI companies are not performing well or not able to recover that money or the earnings, which will in turn have an impact on the consumption of semiconductor devices. Basically, all the AI chips and the storage capacity which we were looking for, kind of long-term demand, that should slow down. So, which generally could impact the S&P 500, because some of these S&P 500 we have seen past 2 months rally was due to these AI and semiconductor device spikes. So, if the AI companies couldn't sustain the growth, then we should see a downward trend in the S&P 500, which in turn adds up to the oil price spike, which currently we have a high inflation right now. Because of that, when there will be a break point where the demand goes down, your S&P 500 crashes, or slowly slows down, and then inflation picks it up. So when that hits, then you probably end up probably end up seeing some of the historical occurrence too, where recession could come back, which we may need to wait and see how it happens. But right now, looking at some of our market growth, recession, nobody wants to talk about recession. Nobody knows whether there's going to be a recession here. So we're going to be just staying with whatever momentum we have. Take advantage of, as a small investors, take advantage of what's going on in the market. Just invest in some of these semiconductor companies. Take the AI advantage of AI companies here. Rally through, see the growth, your financial growth, and when it hits the mark where you see some slowdown, then you can probably make some decisions, corrections there. So that's kind of the overall what the oil price impact historically and the current market right now. Let's look at some of the leaders in the IT sector. First one comes out right now. It's kind of hot in the market, is the semiconductor devices, and in addition, on top of it, the storage companies are basically dominating some of this AI trends right now. There are a few companies like Micron is one of them, prominent one. The other one is the SanDisk one. Then we have WDC, Western Digital company. So these companies are actually performing very well in the current market because of the AI strength, or basically AI boost. From that standpoint, now I picked up this stock. Looking at this stock past 1 year since September, the growth has been significant growth. We have seen close to 500% of growth. If you have invested a small portion of it, probably you would have gained a 500% of growth right now. But off late, looking at some of the short-term growth too, since end of March or the early of April till now, it has actually gone up 134%. So this is another significant growth. Strong momentum is there in the market for these stocks. It's a strong uptrend. The recent churn is more of a consolidation phase. We have seen enough of the growth. Now the investors have actually pulled out some of the profits, and you can see some of the profits pulled out here. You can see the sales are higher than the buys. Those are some of the indicators I look at it. It is more selling versus buying. Now, slowly, once that pullback kind of happened, now investors are putting back money into this company, which means so it's going to take some sideways turn for a little bit, and then look at this price points. Like anything greater than 800 would be the indicator for us to say that, yeah, you know what, the growth is going to come back again. We just look for that. That's why I kind of put down this box thing. Anything inside this particular box, just keep yourself a little bit reserved, because just observe what's going on in the market. You might see a lot of consolidations happening. The moment it crosses 800 or this particular 815 or 816 above, that's a confirmation for us saying that the price appreciation is still progress, in the sense investors still appreciate this company's growth opportunities. Then that's a point to buy some more, right? So whenever there's a pullback, try to accumulate, buy smaller batches of this stock. I think that's the key. Don't put bulk money into this market, into this particular company. Instead, just slowly accumulate it. Whenever there's a pullback in a day, try to accumulate a few shares here in this company. From the growth standpoint, it is in the upward trend. Massive recent breakout momentum spikes are very, very evident here. It has hit the all-time 52-week high, which is also kind of above 800, which is also a good one. Right now, from the demand standpoint, it is overbought. You can see that it has actually spiked in this particular day, which is May 11th. That's when the pullback happened. It's consolidating right now. People are slowly taking the profit out. They're actually buying a smaller portion of it. I'm also watching another indicator called RSI-based moving average. This is one indicator, kind of gives me a pattern that whenever the RSI value is higher than the RSI-based moving average, that's an indicator for me that the price appreciation is in the positive direction. So there's a growth which is evident here. And similarly, if you look at it, there's a growth here. The positive momentum growth here. And similarly, when it comes down, when the RSI goes below RSI-based moving average, and that's a confirmation saying there's a pullback happening. So whenever there's a peak demand hit, overbought situation, generally market tends to pull back. That's very natural. And I think some of the indicators are helping helping me to decide when to get in, when to get out. So that's kind of the momentum here, especially when you look at this point. This is a point where you want to get in. That's a positive confirmation for us. And then when do you get out? When the particular RSI goes below the moving average. So that's another confirmation for me to get out. So that's where the demand is down. Consolidation phase kicked in, and shares are getting accumulated. Right, consolidations are happening. So that's a new indicator I've been following for a few months. So keep watching my videos. I might explore a little bit more. I'm still some of my backtesting code is still running. I'm trying to figure out whether it is a reliable indicator or not for some of my analysis, some of my investments. But I will keep you posted as I start using it heavily in my upcoming investments. So that's on the Micron. And looking back into it, SanDisk has a similar pattern. I know we looked at it Feb 2026. That's when the consolidations were happening. This was when the price was around 589. Look at the growth. It is right now. It's 1500. So two times more. So that's a good growth here. So if you guys seen my video, invested in this one, I think you're looking at 137% growth from since Feb 2026 till now. You're looking at close to 200% growth. So that's a good growth, good appreciation to your investment. So the trend is pretty much similar to Micron. They're going to kind of mimic, some of these storage companies mimic the chart, kind of the price appreciation. So you will see the same trend happening here. Moving averages are perfectly placed. You have the nine days, 20 days, and 50 days perfectly aligned. So you have still price appreciation momentum in the upward direction. Right now, it's kind of in the consolidation phase, similar to the Micron. Same way, demand is high, peaked, and then it went down recently. People have taken profits here. Now the kind of a consolidation phase. Now slowly investors are going to invest money into this company whenever there is a pullback. So that's what's happening in the SanDisk too. So pretty similar pattern of price momentum here between Micron and SanDisk. In addition to that, if you switch to Nvidia again, it is kind of not so appreciated, similar to what we have seen with the other semiconductors. Again, it depends on how much has been invested in this company, especially when you have a top three market cap. Some of these companies, their progress will be very slow. In sense, price appreciation will be very slow. You will not see a spike of 5-10% growth within 1 or 2 days. It's going to be slowly, gradually. It will keep building because there's so much volume right now in this company. So much shares investors have invested in it. Significant spike like 10-15% in 1 to 2 days will kind of explode some of the incomes or the returns. So that's why some of these big time companies actually slow down their growth too. There was a good period of consolidation. This is actually a good period of consolidation where we have seen a lot of investors have taken advantage of it. Anywhere from 200 to 170 is a good price area for buying. And now after that, when it came out of this box, that's when it's an indicator for us that, hey, there's going to be demand coming up, right? So that's what we have seen. The demand actually slowly started building. It actually peaked and then went down, then again came back again. So you will see uh, a good demand coming up for Nvidia, and then a lot of positive news is there in AI world. So you will see the trend going to continue, but not to the pace what the Micron or SanDisk is doing, but it's going to perform its own. It's going to take its own path, especially Nvidia. From the investment standpoint, what is the return since end of March? You're looking at 30 to 40% growth, which is even it's a really good growth within this 2 months. So keep investing, keep buying Nvidia. This has a lot of potential in the market right now as well as in the future. So the company is performing very well. There's so much profit they're earning by selling their chip, and then they have some tie-ups with the Grok. Grok is getting Grok is getting deployed or implemented on top of Nvidia chips. That's another boost to Nvidia. So, and the price is also in a very good state. It's not expensive compared to other semiconductor companies. This is a kind of reasonable price, and you should see good level of consolidation here, and then again price appreciation at this level. So it's kind of a box step mechanism. You should see steps of boxes, and then you climb up the price. That's the momentum I see. And from the over demand, kind of overbought versus oversold. Right now, it has peaked. The demand actually slow down. Consolidation is going on. You should see a sideways turn, and then anything above this price point, 236, is another area to buy. Keep adding to your portfolio. So when it crosses, like when it is consolidating whenever there's a pullback, buy smaller batches, and then when it crosses 235, 237, is a confirmation for you that the price is going to appreciate a little bit more. So keep watching this Nvidia. Nvidia is in a good shape right now. In addition to that, I also want to jump into the energy sector. I have a few stocks to share for that. Let's look at some of the energy sector stocks. I picked up few of them. You can actually go directly invest in good energy companies, or you can choose the ETFs or mutual funds, energy mutual funds. So different mechanism, different vehicles are there, especially energy sector. Energy sector is a very matured sector. You won't see a significant spikes similar to what we are seeing in IT sector or all the fast growing AI related companies and ETFs. This is more matured sector, so price appreciation is very slow, but every company you invest in the energy sector, they pay you a good dividend. Dividend is the primary driving factor here. I picked up three stocks for our discussion. One is a pure company, kind of oil enriching, refining, drilling company. That is one company I picked up, which has recently showed up in my list, in my research list. And then the other company or ETF, this is the direct company energy company. The other one which I picked up was an ETF, which is the Vanguard Energy ETF. This is another one which I look at it very closely, and I invest money in this one. And then the third one which I looked at it is the mutual funds, which is the Tortoise Energy Infrastructure Corporation. These are some of the attractive ones in the energy sector. Growth will be very slow in mutual funds, but it has its own advantages too. So let's dive into the first the direct company, which is in the drilling business in the energy sector. So this showed up in my list uh, recently, that this actually some of the metrics or indicators are aligning perfectly. So what I look at it as the one which I closely monitor is the moving average. Moving average should be properly aligned. I should have 9 days, 20 days, and 50 days moving average properly aligned. That's when I tend to invest. So this is one of the buying point for me, one of my indicator here. I closely monitor this one, and which recently kind of had a fluctuation. Now it aligned perfectly fine. I think it was yesterday or today. It aligned perfectly fine. This is a time to look for investment opportunities. So this is the one company. They're primarily in the contract drilling. They one of the reason I picked up this one was a dividend of 2.45. So they do provide you a dividend. They have been missing earnings past 3 quarters, but I think with the oil demand and all those things should bump up some of the local drilling companies too. So some demand should go up here. Looking at some of the growth standpoint, past since 2025 August onwards, that's where it has hit the base, and you can see that it had a good significant price momentum upward direction, close to 160 percentage, which is a pretty good growth momentum since October. So it's not even a year. It has your if you have invested, your investment would have been doubled, so close to doubling. That's one parameter I look at it. At the same time, the demand is also kind of picking up in the energy sector. One is due to dividend. The other one is also due to the geopolitical and supply chain disruptions. That's also causing some positive momentum in the energy sector. So looking at it, the price is currently around 39.77. So there's some consolidations happening right now. It has kind of overbought situation, came down, demand is coming down slowly, and the RSI based moving average is slightly above the actual RSI, which means this is a wait and watch game right now until it changes the momentum, until it changes where you have the RSI kind of picking up and the moving average is down below. RSI based moving average is down below. So that's a point where I tend to invest. So this is a kind of a new indicator I've been looking at. So this is where you have the opportunity, especially for energy, if you want to directly invest in some of the companies. But generally, I will be cautious to invest in these companies because uh, some of this geopolitical stuff have an impact on it. So I tend to invest more on ETFs and mutual funds. So one ETF which I picked up was the Vanguard ETF. Again, it actually had a very long base for quite some time since 2022. The oil prices were kind of in the sideways momentum. Now, off late, the price appreciation or kind of reversal happened because of so much happening in the oil industry right now. So much geopolitical tensions, supply chain disruptions, which actually bumped up and on top of it, the war bumped up the oil prices, which actually it's not just the oil, even the domestic power demand also went up because of so many data centers getting lined up by all these big giants AI companies. That actually drives some of this energy sector demand too. which if you look at it is very evident here right now. If I look at the Vanguard Energy ETF, I see it had a close to 41 percentage spike since December 2025, which is a good growth. And then it is kind of in a consolidation phase right now. It is churning right now, and I don't think so. The energy demand is going to go down. It's building up. Even if the oil sectors are not performing, the other energy sectors should start kind of compensating some of this demands. You should see the similar consolidation phase, and then the price appreciation is anything above 180 is a good indicator for us to say that, hey, you know what, we just came out of the churn and it's a momentum shifting state where it is moving upward. Then that's a point to enter back into this ETF. So you could take advantage of all the pullbacks you're seeing right now. It's kind of slowly accumulate the stocks, buy shares in a smaller batch, accumulate them, take advantage of the dividends, and then when the price appreciates 180 above, it's an indicator that the momentum is again back on track and it is pushing the price to the upward direction. So in addition to that, the dividend is around 2.32 percentage. And the growth for 5 years is 131. I think with the recent political churn and the AI demand, this sector is going to continue to grow. We should see even bigger growth in this particular sector. So ETF, this Vanguard ETF is one of my favorite ETF. The other one which I have is a mutual fund, which is called Tortoise Energy Infrastructure. Energy sector. The one more stock which I wanted to share is the Tortoise Energy Infrastructure Corporation. This is actually a mutual funds, which is a slightly different the way it gets traded or bought in the market. And if you're looking at the energy sector, different types of energy sector here. One is based on the power. Example is electric and other power generating companies. The other one is other type of energy sector is the oil and gas related companies. And especially when you're dealing with oil and gas, there are few tax implications, especially if you're buying shares from a limited partnership or master limited partnership type of companies, then you're not buying the shares. Instead, you're buying the units in that company, which actually makes you tax liabilities there. They provide you K1 form end of the year, which you need to file it in the taxes. Instead of buying those LP and MLP type of companies, there are other types of companies which are dividend based companies. Those are less tax complicated, as well as it's a normal dividend shared to all the consumers or kind of investors. But this particular ETF, it kind of mutual fund, has a combination of both limited partnership companies as well as dividend based companies lined up inside this. Okay, it's kind of another model of ETF. A bunch of holdings are there, energy, oil and gas related companies here, which actually helps you to avoid some of those K1 forms end of the year. Less tax implications, and it treats the dividend as a normal, ordinary dividend. So that's an advantage of going towards ETFs, not directly buying limited partnership companies. Looking at this particular company, I think since pandemic, this mutual fund has grown significantly, like close to 400%. And then since 2023, the growth is somewhere around 64%. So it's a good growth here. We have seen oil prices are consistently higher, and there was slightly dip in 2022, 2023, and then again it picked up. And with the current geopolitical tensions, I think some of these opportunities are actually helping this mutual fund to grow even faster. The other advantage of buying this mutual fund is that it is distributing or kind of providing dividend of 11%. In an average between 8 to 11 is the kind of range where they are in. So if you're investing money, not just the growth in the principal amount, it also provides you a very good dividend, which is 11% dividend. And looking at some of the dividends, they've been previously distributing the dividend quarterly, but off late, I think since 2025 or 2024, they just converted this into monthly dividend. So that's another advantage. If you're looking for a steady income, passive income in the form of dividends, this is one good mutual funds, fits very well for your 401k kind of account, and it provides you monthly dividend. So that's an advantage. From the mutual fund standpoint, you're going to see a very slow growth, very tight numbers here, but the growth is going to be there. It's going to be very slow, not compared to how the other direct company shares are behaving. The price movement is going to be very slow, but you will have a steady growth with a good dividend income. So if you're closer to the retirement, or if you're thinking about multiplying your income, this is a very good opportunity. This is a very good mutual fund to invest in right now. And similar, some of this geopolitical stuff has implications here. It is very cyclical in nature. So, from that being said, take the opportunity right now. The opportunity is there. There's a good momentum to the oil industry right now in the energy sector. So take advantage of it. The price movement will be good. At the same time, you're getting a good dividend here.
Yeah.
Vanguard is purely North America domestic thing. It's a simple dividend based, moderate between 2 to 3% dividend. High price appreciation. Definitely, there's a good price appreciation in the Vanguard, and this is actually a quarterly dividend. This is not a monthly dividend, so you will get quarterly, and it's not an income based ETF. If you put it in the 401k or retirement account, it's going to grow gradually. It's going to grow quarterly. You get the dividend. But when you look at the other mutual fund which we talked about, it's TYG, Tortoise Energy Infrastructure. This is now a monthly dividend based mutual fund, so your income grows even faster. So that's kind of the difference between these two types. One is a pure ETF, quarterly dividends. This one is a mutual fund. Now they convert it into a monthly dividend based model. So good fit for income generation. As we wrap up, let's step back and look at the big picture from an investment standpoint. Over the last few years, we have seen how the market moves in cycles. Strong gains in 2021, a sharp drop in 2022, followed by a powerful recovery from 2023 to 2025. And now 2026, we are seeing growth continues, but it's kind of in a slower pace right now. If you average everything out, the market has delivered around 13 to 15 percentage annual growth over this period, which is actually very good, a strong performance. But what really matters is just isn't just the growth alone. It's how the growth compounds over time. I think that's the key part. Like once you bring the compounding picture, when you think about compounding, this is where things get really interesting. When you look at if you have an 8% return, your investment doubles roughly every 9 years. And if the return is higher than 8%, example, maybe take a 10% return, it can double in just about 7 to 8 years. So as a small annual gains, even when market feels slow, can build into significant wealth over time. I think that's the key part which every investor needs to understand. Whether you're a beginner or an intermediate or an advanced investor, you don't need to complicate the whole portfolio to benefit this. In fact, most investors totally, or in general today, naturally gets exposed to through major companies. And if you have invested in just 3 or 4 mega market leaders like Apple, Microsoft, Nvidia, Amazon, or Google, you're already participating in a bigger part of the market growth. These companies have been driving a large portion of returns in the recent years. I think you probably seen the growth, significant growth year over year. And if you combine with the simple strategy like holding strong leaders, some dividend based stocks, and smaller allocation to kind of trending the opportunities, you already built a solid foundation. I think you don't need to worry whether you are investing right or wrong. If you are invested in this mega companies, you're already taken the right step. You don't need to overcomplicate the whole portfolio. Consistency really matters, not the complexity. I think that's my philosophy here. So the key takeaways for this particular session is like, market will always go through ups and downs. Always have the big picture, long term goals. Growth may be slower now, but in a long run, you will get your solid returns back. So the most my recommendation here is that stay invested, keep adding regularly, allow the compounding to work, let the money work for you rather than you work for money. That's the philosophy everyone takes, especially all the investors are taking here. I think as a beginner or kind of an intermediate investor, make sure that your money works for you rather than you work for the money. That's the real model you have to put in place in your portfolio, and that's where the real long-term wealth gets created. I think that's the whole positive about this investment summary. So I want to end with this investment summary. So keep invested, stay invested, look for compounding opportunities, always think long term rather than just worrying about looking at the short term, what's happening in the current market right now. So that's kind of the kind of overall message I wanted to share to all my viewers. Thank you.